On this episode of the Elite Realty Group Podcast, we are going to talk about one of the hottest topics in the real estate industry right now, and that's the topic of 50-year mortgages. We're going to look at the pros, we're going to look at the cons, we're going to look at it from the eyes of buyers, sellers, investors, realtors. This is going to be a great episode. Hang on, y'all. Here we go. Hello once again, everyone, and welcome to another episode of the Elite Realty Group Podcast, where you receive the most up-to-date, relevant real estate information you are going to get anywhere on the planet. You're going to get it right here from your friends at Elite Realty Group. I am Mike Elkins, broker, owner of Elite Realty Group in beautiful Morristown, Tennessee. Glad to be with you on another podcast episode today. And we're going to be talking with you about, again, one of the hottest topics going on in the real estate industry right now. And that is the conversation, the topic of, the thought of 50-year mortgages. There's a lot of thoughts from a lot of people concerning what a 50-year mortgage means, what that is. We're going to look into all of that today and give you some information so that you can make the best decision. Should this even become a thing? That's what I think we kind of maybe need to start there. Like the 50-year mortgage, as I'm recording this on November the 13th, 2025, the 50-year mortgage is not a thing right now. But the Trump administration has floated it out there that could be something that's coming in the near future to, in their words, make home ownership more of a possibility for a whole lot of people. Now, I think there's a lot there that you can tackle. There's more to that than just saying it does make it more affordable. And we're going to look into that because what this means for a lot of people, it could mean different things for different people. And that's why on this podcast, we always want to try to give you the information so that you can make the decision. We have said to you many times, you've heard this if you're a frequent listener, as thousands of you are, to this podcast. We want you to have the information so that you can make the decision what best suits the needs that you have. You're going to hear, and you've heard for a while with interest rates, you'll hear it a lot with this 50-year mortgage. You hear it in a lot of things with home prices, like now's not the right time to buy. Now's not the right time to do it. And then you all hear on the other side, oh, you better do it now. Like you better buy because if interest rates drop, home prices are going to go through the roof. You'll start hearing it even more. If 50-year mortgages come, it's going to open up affordability. More buyers are going to hit the market. You better buy now. It's easy for somebody like me to sit behind a microphone and tell you when you should and shouldn't buy a house. But can I be real honest with you just for a moment? Me, nor any of those people sitting behind these microphones need to tell you when is the right time for you to be a homeowner. It's right when it's right for you. Price doesn't matter. Interest rate doesn't matter. 50-year, 30-year, 15, 5-year fix. None of that matters unless it's right for you. If it's right for you, it's right. On the other hand, it doesn't matter if prices drop 50%. If it doesn't fit into your budget, that's not the right time for you to buy a house. It's not the right time for you to get in the real estate arena. Then that means it's not the right time. So people that tell you, oh, you better do this, you better do that, that's not our place. The place is for us to give you the information. That way, the topic we're having today, the 50-year mortgage, if it ever does come to pass, you'll have the information to make the best decision. This is a financial decision that's probably going to be the biggest financial decision that you ever make in the history of your life. You need to make sure you get the right information to make the right decision. So let's talk about it. Let's dive into this 50-year mortgage, okay? When you look at what this means, okay, what is a 50-year mortgage? If you look at standard, okay, I'm going to call this standard. That might be the wrong word, but that's the word I'm going to use today. The majority of people, we've sold thousands of people homes here at Elite Realty Group. The overwhelming majority of people who purchase a home right now and they get a mortgage on the home, the overwhelming majority of those people get a 30-year mortgage, okay? That means for over a 30-year time frame, whatever you want to say, that mortgage is amortized to come up with what the payment is, okay? So a 50-year mortgage literally is going to extend that amortization period from 30 years to 50 years, okay? Same loan amount, okay? Nothing in that's going to change. It's still going to be the same amount of money that is financed. It's just going to be more years for you to pay that. So everything will be the same as far as the initial part. It's just going to be amortized over a 50-year period versus a 30-year period, okay? So let's do a little example here so we can have some talking points as we go forward. This describes to you what a monthly payment would look like for a given interest rate. I'm using hypothetical terms. This is not saying this is what it is or would be for you. This is a hypothetical situation for you. I'm not quoting interest rates. I'm not telling you what this is. I'm giving you an example. So the data that I'm going to give you is the example of a $348,000 mortgage, because that's about what it is here in the area that we are in East Tennessee. So a $348,000 mortgage at a 6% interest rate on a 30-year term, which is where we are right now, okay? The payment on that would be $2,086 a month, okay? If we took that same $348,000 mortgage at that same 6% interest rate, and we took that for over a 50-year term, so we amortized out over 50 years, that payment would go from $2,086 a month to $1,832 a month, okay? So a little bit over what you would say, a little bit over or right at $200 a month, okay? It's basically $170 a month, okay? That is quoted from the Business Insider where we got this information, okay? So the big change of that, if you look at it, you are going to be paying less of a payment per month, okay? But the interest is where everybody's saying, watch out for these products, okay? Now, we're laying this out right now, what this 50-year mortgage is as far as the product goes. So the interest that you're going to pay on that over 30 years, okay, same term, $348,000 mortgage over 30 years. If you paid every single payment for those 30 years, which we'll get into in a minute, you would pay $403,000 worth of interest. Okay, that's a lot of money. Okay, that's a lot of money. Same thing over 50 years, you're going to pay $751,000 worth of interest. So yes, you will be paying, or you would be paying, okay, a lot more interest if you do this over 50 years. Now, let's stop about this. Let's have this conversation right here. I think it's a good place to insert this. The average person buying a home does not pay off right now. The standard is 30 years. The average person does not do that right now. Okay, that does not happen. It does happen, but it's very, very rare. The average person moves 8 to 11 years. Okay, 8 to 11 years. So they're not paying that interest anyway. Okay. So to sit back and say, man, that's a lot. It is a lot. But the likelihood of someone paying that, it's not going to happen, okay? Legally and structurally right now, this 50-year mortgage, it's not even out there for us, okay? It's not out there. Implementing this change, it would require regulatory, legislative adjustment. So this is just something that could happen, okay? This is just what could happen. But the FA director, Bill Pulte, has posted they are indeed working on a 50-year mortgage. So that's why we're giving you the information today. So why is this being talked about? Well, it's being talked about because the affordability challenge that's out there right now for people to buy a house, okay? It is a challenge. Home prices are up, interest rates are up, elevated incomes, they haven't kept up with what's going on in many markets. The median home price, again, is $415,000, okay? Affordability is a real thing. That's why it's being discussed right now for this to be done. The payments, monthly payments, what I pay monthly, people are looking at that more than what the price of the house is, what the interest rate is, what the finance rate. They're looking at what does it cost me per month. And that's the major barrier right now that buyers are having when buying a house. But lowering that payment over a long term, more people may be able to qualify for homes. That's why it's being looked at, okay? Qualifying and feeling comfortable to being a homeowner. Being a homeowner is a good thing. I think we can, for the most part, I'm not going to get 100% agreement upon that. But for the most part, people agree being a homeowner is a good thing, okay? So the idea is being discussed because the monthly payment would be less, okay? When you look at that from a real estate perspective, a business perspective, more buyers being able to get into the market could increase demand. It could help sellers, which is a good thing, okay, for sellers, realtors, business side of that, okay? They're just looking at this as being a wide arsenal of solutions to improve affordability, okay? When you look at this for what it means for the East Tennessee market, modest monthly payment relief, like we just talked about, almost $200 a month difference on that mortgage payment, that can make a huge difference on somebody being able to and being not, okay? So now that we've kind of laid that out there, what it is, what the product is, what it means as a 50-year mortgage, why that it's being floated and why it's being discussed, let's look at some pros and cons, okay? I think this will be good discussion for us. So let's start out with the obvious, okay, as far as the pros go to having a 50-year mortgage product, okay? The obvious is lower monthly payments. You just heard it through that example. You're almost $200 a month on the example that we had. That can open up being a homeowner, the affordability of being a homeowner to a lot of people, okay? That's an advantage, okay? That's a pro for this happening, okay? We're going to get to the cons, so you negative Neds, hang in there. We're going to get there, but a pro is the monthly principal and interest portion. It's going to drop, making that affordability better for people in the short term. This could help people qualify for a home that otherwise they might be priced out of, okay? That's a pro. Another pro, okay? The possibility of just increasing home ownership, the access to being a homeowner, okay? If you're renting right now, if you're living with someone, you're not literally building your net worth, okay? Renting, it's 100% interest. The principal's never going to drop. I don't care how long you stay there. Nothing is going to be benefited from you through just that payment portion of rent, okay? So the possibility of being a homeowner opens up to a whole lot more people because of, number one, that home ownership access opens up to many people. For younger buyers, the lower payments opens the door. The industry has noted this is a major potential as to why they're looking at this, okay? For us as real estate people, this could grow the pool of buyers, okay? More buyers, more eligible people, maybe meaning more people opening up that opportunity for first-time buyers being able to get into the marketplace. That, my friends, is a pro. Another pro of a 50-year mortgage is the flexibility in cash flow, okay? A buyer might prefer lower monthly payments now, early in their career, raising a family, with the ability to accelerate payments later if they desire those, okay? So you've got flexibility because that payment is lower, okay? Sellers and agents, this is a good tool. I mean, this is a good thing for marketing, financial discussions for people, okay? It's a really, really good thing, that flexibility of people now have a little bit more cash flow each month because the payment is less. That could be a good thing for people, okay? So that's some pros. What do you see? Okay, what are your guys' thoughts on this? What are some pros that you see of a potential 50-year mortgage product being out there in the marketplace for people wanting to get into home ownership? Put some pros. Let me hear from you guys on some pros, okay? Let's go to some cons now, okay? Because as I do feel there's pros, at the same point in time, boys and girls, ladies and gentlemen, I think there are cons to this product also. Okay, let's go with the first con. Okay, the first con of a 50-year product of a mortgage, meaning that much higher total interest is going to be paid. The example we looked at earlier was 400 and some thousand, 700 some thousand. That's con. Especially if you're that person, you're going to keep it for 50 years, which the likelihood of that happening is very low. However, that is a con, okay? You're going to pay a lot more in interest paid in if you pay that 50-year product off, okay? Which literally means because you're paying more interest in, I think this is the bigger one, okay? You're going to build equity up a lot slower, okay? One of the beauties, one of the benefits, one of the cons of being a homeowner is building equity. Now, I think you have to put this here. I think we got to say this here. You're still on a 50-year product going to be building equity, okay? Because a portion of your monthly mortgage payment is going to be going toward the principal. But because it's stretched out over a longer period of time, the amount going to the principal is going to be less and longer getting there, which makes your equity slower to build, okay? You do have people right now who they for whatever reason, they have a life change and they need to sell their house sooner rather than later. Those people are going to experience less equity, especially the sooner you would try to sell your house. That, of course, is an obvious statement to make because you're paying that over a longer period of time. However, it is still an equity building situation for you, okay? It is still an equity building situation for you. Just less of the money per month is going to be going toward the principal. That is a con in my professional opinion of this. Number 2 con. It's just a longer debt burden, okay? You're on the hook for longer of a debt than you are if it's 30 years. 30 years, 50 years, they're both a long time. We were having the discussion yesterday in our office meeting. We just got a report from the National Association of Realtors, and in that report, the report told us that right now the average age of a first-time home buyer is 40 years old. That's the highest it's been in the history of this data being measured. 40 years old. So if we apply this, but you can look at this on 30 years too. But if we applied this 50-year mortgage to a 40-year-old, they're going to be 90 years old paying the mortgage off. Okay, so that's a long debt. You got to look at that now. I'm into retirement. That debt's going to be there in retirement. All those things, you have to look at that. But even if you say the 30-year product we have right now, that 40-year-old is going to be a 70-year-old. You're still looking at the same things. You're just not looking at it in the longer term. Okay, so that's a con. Let's look at the third con, okay, of a 50-year mortgage product. In my opinion, it still really doesn't address the root cause of affordability, okay? There's root causes to this affordability happening right now, okay? It's the supply, shortage of homes, construction costs, land costs, zoning, permitting, interest rates. Those are deeper problems to me, okay? Those are deeper problems to me than just the payment thing, because all of that extending that term, you could look at it as that's just a Band-Aid being put on. You know, that to me, the root cause of home ownership and affordability is really things that you need to look at also, okay? You've got to look at that also. So, you know, there's implications, there's good, there's bad, there's ins, there's out, there's pros, there's cons to this 50-year mortgage product. It just kind of depends on where you fit in to the marketplace, what you're trying to do as far as that goes. So the things that you need to be looking for, okay? Here's the good information for you, the listener, the person watching this today. Here's some questions that you need to look at, okay? What to watch for and questions for you. What interest rate will the 50-year term carry compared to a 30-year? Will there be a difference? Okay? That's information we don't know yet. Will a 50-year term be a higher rate than a 30-year term? Okay? That's things you need to watch out for. If that is that monthly savings, does that shrink? If the rate's higher, the payment's going to be higher. Shrinking down that difference between that 50-year and 30-year. That's something you need to look for. What is the equity build pattern? This is number 2 you need to look at. What is the equity build pattern? Will you have enough equity to refinance or move within the next 10 to 15 years? What's the projection of home appreciation? I would be, if I'm looking at this on a longer term, I would be very conservative on what home prices are going to appreciate over the next 8 to 10 years, which is the likelihood that you're going to move. And then look at that amortization chart and say, where am I going to fit in? Am I going to be able to do that? What is that equity build pattern? Okay. And then I think you also have to ask yourself the question that goes right along with this: what's your time horizon for this home? Are you looking to move in the next 2 years? That 50-year product might not be right. 5 years, 8 years, what does that look like? If you're looking to stay there 8 to 10, 12 years, it's probably not going to, well, it's not going to hit you as hard, but that's what you got to look at. I think another good question you have to ask yourself when asking yourself these questions: is this a good product? How does risk of inflation, home value changes, maintenance over 50 years, over that longer term? We tell people all the time, look at your roofs, look at your HVAC, look at those big ticket items. That's going to be a cost. Well, if you're living in it longer, that's going to be something you need to budget in. I'm probably going to have to do this before I sell because I'm staying in the house longer. Are you financially comfortable with the longer commitment, the debt? Are you there? How does this affect your retirement? Your goals for when you retire? Or were you wanting to have the home paid off by the time you retire? Were you wanting to be debt-free from that home before you retire? You got to look at that. Are the underwriting guidelines still the same? The debt to income, the credit score, or are they loosening that? I think that's things that you have to look for, okay? What are the regulatory announcements that are coming forward? That's things that we need to be looking at, okay? Here's my take as we go out the door on this, okay? This is my professional view as looking on this. I believe a 50-year mortgage product, I believe it could be a useful option in specific cases. I don't think it's something, and we say this a lot here at Elite Realty Group, and so many people try to do this. I think a lot of different moves and strategies and do this and do not do this in real estate is a blanket. People just throw a blanket over it and say, oh, it's right for everybody to do it, or it's wrong for everybody to do it. I do not think that that's this case, especially with this product. I think it could be a useful option in specific cases, especially buyers who need a lower monthly payment, who plan to stay there for a little bit longer term, helping that equity build. I think that's a good thing. I think for most of the people in East Tennessee, you might be recommending defaulting to that standard 30-year term, unless there's just something that's you need to do for that 50-year. Use the 50-year term as just a tool. It's something that you look into, okay? Not something that you have to, okay? As a buyer clients, those kind of things, look at that longer term equity. How's that going to be done? With really what I think you need to look at the exit strategy in mind. I think it makes your exit strategy more important than to just say, I'm going to sell it in a couple of years anyway. I think if you elect to go with the 50-year mortgage product, I think you're going to have to look at that a whole lot more. So today we've looked at, again, the pros and cons. It's the big thing. The Trump administration has floated the idea. They're saying they're looking into this 50-year mortgage product. That's why we're discussing this today, is giving you the information. This is where we stand now. This is what we know now. It's being looked into. But I think these questions, these pros, these cons, the stuff that we've gave you today, questions you need to ask yourself, things that you need to look into. I think this is great information for you. Now, here's the offer for you today, okay? If you're out there and you're thinking, well, wonder if a 50-year mortgage product would work for me, not only can we help you look into that here at Elite Realty Group, we have mortgage professionals that we work with, several wonderful, outstanding mortgage professionals that will allow you to answer that question, is a 50-year mortgage product right for you? Friend, that's only a question that you can answer. And you need to be the one that answers that question. As we get more information on this product, if anything develops more on it, you'll be getting more information from us on that. But right now, as far as a 50-year mortgage product, This is where we stand. Today, you've received what it is, what it means to you, some pros, some cons, and some great questions that you need to be asking yourself. If this 50-year product does come to the marketplace, things that I need to look at. I appreciate you watching today. That does it for this episode of the Elite Realty Group Podcast. Be sure you're tuned in, connected to, subscribe to whatever channel you're watching or listening to this on as we drop new content on a daily basis. Thank you, friends, for watching this episode today. I look forward to seeing you on an upcoming episode. Until then, be safe, be blessed. Over and out.